Joining us now is Carl Larry. He's Director of Energy Derivatives and Research at Blue Ocean Brokerage. And obviously, it was an interesting day between the OPEC lack of agreement and also the stockpile numbers that we got out here in the U.S. Let's take OPEC first.
Sure.
The failure to come to an agreement here, does it just reflect the lack of spare capacity that we're seeing at the member nations besides Saudi Arabia?
Well, the big thing is it becomes very political, and that's the one thing we knew going in. It was going to be a very political meeting, and what had happened is it was a political meeting, and we're starting to see a lot of dissension here, and that kind of sums up what's going on in the Middle East right now. So it's an important thing that they made no decision. It's even more important that there's this fracture going on right now within OPEC. Pretty much they're just saying that they don't want Saudi Arabia to raise their production, and Saudi Arabia is saying, well, we're going to raise our production, and that looks like it could splinter the group.
So when you're saying it's a political issue here, it's basically everybody against Saudi Arabia. I mean, does it have any allies?
Well, I think that when you talk about spare production or production that needs to be put back on the market, there's only one reason that we need to do that, and that's to help the U.S. prices come back down. Globally, we're looking at an economic recovery. We do want lower prices, but the only people that are really stomping their feet are the U.S. So it almost seems like an anti-Western movement.
At the same time, I mean, how meaningful are quotas at this point, since they're so frequently ignored? Is this all a lot of posturing that doesn't have much effect when it comes to the actual price of crude that makes it to market?
You're absolutely right about that. It doesn't. But the problem is, again, it becomes a political statement. They're saying to Saudi Arabia, do not raise your quotas. Do not use extra capacity that you have. We don't want this to happen. So, again, it makes a statement, not really a physical statement, but more of a political statement.
Well, and do they have any leverage against Saudi Arabia when it comes to trying to convince that country to be on their side, or is Saudi Arabia just going to go and increase its production anyway?
Well, they don't, and therein lies the problem. I mean, if Saudi Arabia does go ahead and raise their production, it could really, we could be looking at the end of OPEC right now. It's a possibility.
And so what does that mean for oil prices?
Well, it means that going forward that there's not a lot of leverage or room or spare capacity left. The more demand grows, the more we see oil become in demand. There's not really many things anybody can do anymore outside of Saudi Arabia. They become a very big figurehead when it comes to oil production now.
Now, I saw today J.P. Morgan reiterated its forecast for $130 a barrel at some point this year. Does that sound realistic to you?
It's realistic if we see more trouble go on in the Middle East. It's realistic if we see some kind of physical disruption, a hurricane or a refinery issue or an oil spill again. It's not realistic in the terms of the economic recovery. Right now, demand's pretty low, and if it stays low, then we're going to have prices kind of hover closer to $100.
So even though on the flip side of OPEC, again, I mentioned the stockpiles falling, even though we're seeing a tightening of supplies here in the U.S., that's not, the demand is such that it's not going to be that much of a problem?
No, it's not. I think there was some talk today about releasing the oil from SPR, and it's not necessary right now. It's just we're trying to find a balance between production for refineries and oil that we have in capacity. The drawdown was big today, but we're still pretty high in crude oil supply, so we're trying to find that balance.
So is it possible that we have a scenario where you still see sort of anemic demand, but you also see the prices going up amidst what we're increasingly seeing as a tough time for the economy, whether it's reflected in some of the beige book talk today or some of the jobs data, for example?
Sure, and that's where the interesting part comes from what Bernanke said yesterday, from what Fisher said the day before. We might be looking at a little tough love here, and if they really start to think about raising rates or at least letting the economy kind of pick itself up on its own, we might keep that demand low enough where oil prices will come back down.
Well, and it's also curious, if we see the oil prices start to move up, what does that do to the Fed's mandate of price stability versus the jobs mandate?
Right. Well, I think, we find that demand destruction balance again. If oil prices go too high, we have seen demand come back off, and I think the Fed and the government are willing to let that happen right now. It's like I said, that tough love. They're going to let it work and let it happen and go with it and see where we go from there.
Just quickly here, what's your outlook for the summer driving season then? You continue to see that not a lot of folks are going to be driving long distances?
I think it's an American right for us to drive all summer long, and we're going to do it. But I don't think that prices are going to be that high. Again, if there's a disruption out there, prices will go higher. But right now, I think gasoline prices are trending lower.
Well, I hope you're right, Carl.
Oh, yeah.
Carl, Larry, thanks so much for
Thank
coming in
you.
to talk to us about oil prices today and that big OPEC story about failing to come to an agreement. Thanks a lot.
Thank you.